To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
So friends, let's look at a question from material costing. Messrs. Tanishka Materials Private Limited produces a product names S. The consumption of raw material for the production of S is 210 kgs to 350 kgs per week. Now friends, what's important to note here is that they have given the consumption as 210 to 350 per week. So let's be very careful with that. The other information is as follows. Procurement time 5 to 9 days. So minimum it takes 5 days, maximum it takes up to 9 days. Purchase price of raw materials rupees 100 per kg. Ordering cost per order rupees 200. Storage cost 1% per month plus rupees 2 per unit per annum. So some information they have given in terms of per month, some they have given in terms of annum. We have to calculate the storage cost per unit per annum. So when we are doing the calculations, we will translate. Next, consider 365 days in a year. Alright. Now only careful point here is they have given the consumption on a weekly basis and other information on a daily basis. So that consumption also we will convert into daily and only then do our calculations. Let's look at what is the requirement. You are required to calculate the economic order quantity, EOQ, alright, simple. The reorder level, alright. The maximum stock level, the minimum stock level, average stock level. So all of these are simple straightforward calculations which we can calculate. The number of orders to be placed per year. Once we know the economic order quantity, then we will divide it by the annual requirement. We will come to know what is the number of orders that are to be placed. Then the total inventory cost. So all these bits are simple straightforward which we can compute. Now, if the supplier is willing to offer 1% discount on purchase of total annual quantity in 2 orders, so instead of whatever EOQ we calculate and the number of orders that we calculate, instead of that, if we are going to order everything in 2 orders, then they are going to give us 1% discount on the price. Now what is important, they are asking us whether this offer is acceptable. So we are going to calculate the total cost of inventory in the previous bit. We will recompute the cost of inventory considering the 1% discount offer. If the revised cost is less than the original cost, we will accept the offer. Otherwise we will say we are not interested. And then lastly they are asking if the answer is no, then what should be the counter offer with respect to percentage of discount. Now because the institute is asking this question, I know that the answer to the previous bit is definitely going to be we are not accepting the offer. So they are asking us to now calculate if we have to accept, then what should be the discount that we are expecting in terms of percentage. So let's jump into the calculation and look at the solution. Let's first start with the working note 1 where we compute the requirement in days. So the minimum requirement per day is equals to 210 kgs. This they have given for the week. So divided by 7. So 210 divided by 7, that is 30 kgs per day. B. Maximum required per day. They have given 350 kgs may be required for the week. So 350 divided by 7. We get 50 kgs per day. And if we have to calculate the average requirement per day, that will be minimum plus maximum by 2. So that will be 30 plus 50 divided by 2 or 40 kgs per day. Now that we have converted the weekly requirement into the daily, we can start calculating the answers for the bits asked in the question directly. So let's go to the first bit. Now what are they asking in the first bit? They are asking us to calculate the economic order quantity. Now economic order quantity is nothing but under root 2AO by C, where A is the annual consumption, O is the ordering cost per annum, and C is the carrying cost per unit per annum. So let's find out whether we have all that relevant information. If we do not have, let's compute that and find out the EOQ. Alright, let's compute the economic order quantity, bit number A. So we know that EOQ is equals to 2AO by C, where A is equals to the annual consumption, O is ordering cost per order, C is the carrying cost per unit per annum. Now, what is A? A is the annual consumption, which is equals to how much? We know that on an average we require 40 kgs per day, and they are asking us to consider the year for 365 days. So 40 into 365, that will be 14,600 kgs. Next, what is the ordering cost? So ordering cost, they have given it as rupees 200 per order. And C, carrying cost, now they are saying is consisting of two parts. One, they are saying it is equal to 1% per month of the cost plus rupees 2 per unit per annum. So this will be 1% into 12. Why 12? Because we have to convert this per month number into yearly number. So 1% into 12 months into what is the purchase cost per kg? The purchase cost per kg, they have given it as rupees 100. So 1% into 12 into 100 rupees plus rupees 2. So that will be 12 plus 2 or rupees 14 per unit. Alright. Therefore, EOQ is equals to under root 2AO by C, which is equals to under root 2 into 14,600 into ordering cost of rupees 200 divided by rupees 14. So 2 into 14,600 into 200 divided by 14, we get roughly 645.865, or we can say 646 units. So the economic order quantity is 646 units. Now let's go to the next bit. In the second bit, they are asking us to find out the reorder level. Now what is reorder level? Reorder level is the level at which we are going to place the order for the economic order quantity. So how do we compute the reorder level? Reorder level is nothing but the maximum consumption, or we can say the maximum requirement into the maximum lead time. Now what is the maximum requirement? The maximum requirement is 50 kgs per day, and the lead time they are saying it takes from 5 days to 9 days. So the maximum here is 9 days. So the reorder level is going to be 50 into 9, which is 450 kgs. Then let's go to the next bit, which is the maximum stock level. Now how do we compute the maximum stock level? We will have the reorder level plus the economic order quantity, or nothing but the reorder quantity which we have computed minus the minimum requirement or the minimum consumption into the minimum lead time. So this is going to be, our reorder level is 450 kgs plus Reorder quantity is how much? 646 kgs minus, what is the minimum requirement? Minimum requirement is 30 kgs per day, and what is the minimum lead time? 5 days to 9 days. So the minimum is 5 days. So that will be 450 plus 646 minus 150, that is 946 kgs. So this is your maximum stock level. Then let's go to the next bit. Now they are asking us to compute what is the minimum stock level. Now how do we compute the minimum stock level? The minimum stock level is nothing but the reorder level minus your average requirement or the average consumption rate into the average lead time. Now the reorder level is 450 kgs minus, what is the average requirement? Average requirement we have computed it as 40 kgs per day into average lead time. Now what is the average lead time? They have said the lead time is between 5 days to 9 days. So if we do 5 plus 9 divided by 2, that is 14 by 2, we get average lead time as 7 days. This 7 is nothing but 5 plus 9 divided by 2. So this will be 450 minus 280, that will be 170 kgs. This is the minimum stock level. Next, they are asking us to find out what is the average stock level. Now average stock level is nothing but the minimum plus maximum divided by 2. So let's do that simple calculation. Average stock level, it is equals to minimum plus maximum divided by 2. So 170 plus 946 divided by 2. 170 plus 946 divided by 2, we get 558 kgs as the average stock level. Next requirement, they are asking us to calculate the number of orders that we are going to place. So the number of orders placed in a year. Now how do we compute the number of orders that we have to place? This is nothing but the annual consumption or the annual requirement divided by the economic order quantity, because every time we are going to place an order, we are going to place an order for the EOQ. So this will be 14,600 divided by economic order quantity of 646 kgs. So that will be 14,600 divided by 646, 22.60 times. We cannot place an order for 0.6 times. So let's round it off to 23 orders that we will be placing in a year. So now these are the simple straightforward calculations. Now let's come to the important last two bits where they are giving us 1% discount and asking us whether we are going to accept it. If not, what is the percentage of discount that we should be asking for? Alright, so let's go to the requirement G where they are asking us the total inventory cost. Now what is the total inventory cost? The total inventory cost is nothing but the cost of buying the material, cost of ordering the material and cost of carrying the material. So let's compute the total cost of inventory. So cost of material, which is equals to 14,600 kgs into 100 per kg, 14,60,000. Second, ordering cost, this will be 23 orders into rupees 200 per order, 4,600. And lastly, carrying cost, which will be 646 kgs, that is our EOQ, divided by 2, because this is the average quantity that we are holding. So, this will be nothing but EOQ by 2 into the carrying cost per unit per annum. So, 646 kgs EOQ divided by 2, the average inventory held, into rupees 14, which is the carrying cost per unit per annum. So, 646 divided by 2 into 14, we get it as 4,522. So, the total inventory cost will be 14,69,122. Now, next. Now, they are asking us to evaluate that 1% discount. So, whether to accept the supplier's offer. Let us compute the revised inventory cost. Revised inventory cost. Cost of purchase. This will be 14,600 into 99. Why 99? Because they are going to give us 1% discount. Current cost is 100. So, 14,600 into 99 will be 14,45,400. Second, ordering cost. So, the ordering cost, we will be placing only 2 orders as per the offer, and cost per order is 200. So, that will be 400 rupees. And lastly, we will have carrying cost. But now here we will have to recompute the carrying cost, because carrying cost they have given 2 components. First component is 1% per month of the cost plus rupees 2 per unit per annum. So, that 1% on the cost is going to change. So, let us recompute that. So, this will be EOQ by 2 into C, but this C we do not know. So, let us compute that. So, C will be 99 into 1% into 12 plus rupees 2. So, that is 99 into 1%, 0.99 into 12, 11.88 plus 2, 13.88, and the total calculation will be then 7,300 divided by 2 into 13.88. But sir, our economic order quantity, when we calculated it was 646, why are you taking the 7,300 here? Sir, here the number of orders have changed. They are asking us to, put the entire or buy the entire material only by placing 2 orders. So, if 14,600 is the total annual requirement, and if we divide by 2, we get 7,300 as the economic order quantity, or simply put the order quantity under the current 1% discount scheme. So, 7,300 is what I am going to place, divide by 2 is going to be our average inventory into 13.88. So, that will be 50,662, and if we add up, we are going to get 1445,400 plus 400 plus 50,662, 14,96,462. Now, under the previous calculation where we were doing the total inventory cost computation as per the EOQ, what was our total inventory cost? Our total inventory cost was 14,69,122, but now it is 14,96,462. Your inventory cost has gone up. So will you accept this offer? Our answer will be, since the cost of the total inventory is going up, your offer is not acceptable to us. Don't give discount, keep your discount with yourself. We are happy as is, where is. Now they are asking what is the percentage of discount that you want if this offer has to be accepted. So let's look at that computation. Now friends, in the last bit, they are asking us to give us a counter offer. So we will have to find out what is that discount rate that we require in order to accept their offer. See, under the revised offer, the number of orders are going to remain same, which is 2. Our annual requirement also is going to remain same, which is 14,600. Now the only 2 parameters which are going to change is the cost of buying, because whether it is 2%, 5%, 10% discount that we require, we don't know. It is an unknown number. So that discount percentage we need to find out. It is unknown, we will take it as X. But because of that, what is also going to change is your carrying cost per unit per annum. Because how have they given the computation of carrying cost? It is it is consisting of 2 components. Component 1 is 1% per month for the purchase cost. So if the purchase cost changes, this first component is also going to change. And if we can calculate that, we add the second component, 2 rupees per unit per annum, we arrive at the total carrying cost. But since there is a variable which we don't know and which we want to find out, we will have to take help of algebra, put the requirement in terms of an equation, and then find out what is it that we exactly require. Now, when will we be indifferent between our current position and accepting that offer? At least cost has to be same. So can I say, even under the revised offer, my total cost should not exceed the total inventory cost under the existing scenario. So we will use that total cost in order to find out what is the minimum discount that we require. Alright, let's jump into the calculation. Counter offer. Let the discount rate be X. Therefore, revised purchase cost will be 14,600 into 100 minus X. Or friends, let's do one thing. Let's say let the discount be X instead of the rate. Later on we will convert it in terms of percentage. So it will be easier for us to compute. So if the discount is X, then the purchase price will be 100 minus X. Alright. Your revised carrying cost will be 1% into 12 months into 100 minus X. This is one component plus 2 rupees. So this will be 12 into 100 into 1%. So that will be 12 minus 0.12x plus 2. So this will be 14 minus 0.12x. Now let's put it in the equation and let's use this. Therefore, cost of purchase plus ordering cost plus carrying cost, all of this together should be equal to 14,69,122. Therefore, cost of purchase, So that will be 14,600 into 100 minus X plus ordering cost. 2 orders into rupees 200 plus carrying cost 7,300 divided by 2. Why 7,300? Because we are ordering only 2 times in a year. So 14,600 by 2, that is 7,300. So per order we will give 7,300, but that is not the average inventory that we are carrying. So if we further divide by 2, we will get the average inventory that we are carrying throughout the year. So that into 14 minus 0.12x, this should be equal to 1469,122. So if we simplify this further, this will be 14,60,000 minus 14,600x plus 400 plus this will be 7,300 by 2, which is 3650 into 14 minus 0.12x equals to 14,69,122. So this, if we further solve, we get 14,60,000 minus 14,600x plus 400 plus 3650 into 14, 51,100 minus 3650 into 0.12, 438x is equals to 1469,122. That will be 14,60,000 plus 400 plus 51,100, 15,11,500 minus 14,600x minus 438x minus 15,038x. This is equals to 1469,122. That means 15,038x is equals to 1469,122 minus 15,11,500 implies minus 15,038x is equals to 1469,122 minus 15,11,500 minus 42,378. Therefore, x is equals to 42,378 divided by 15,038, which is 2.818, or simply put 2.82. Therefore, we have x as 2.82. Therefore, we want a discount of rupees 2.82, and if we have to express in terms of percentage, therefore, rate of discount that we require is 2.82 by 100 into 100, or simply 2.82%. So, if they are willing to give us 2.82% discount, we will be indifferent between their offer and our EOQ, which is the best case scenario. So, this is how we have to approach the question. Now, friends, in this question, the first 6-7 bits were easy and relatively straightforward. The time consuming and the skill required, the part where it is required is the last 2 bits. So, we will have to approach this question carefully, and in a systematic manner we will have to answer this question. Friends, let's look at a question from employee cost. HR Limited is progressing in its legal industry. One of its trainee executives, Mr. H, in the personnel department has calculated labor turnover rate at 24.92% for the last year using flux method. Following is the data provided by the personnel department for the last year. So they have given us a table wherein they are indicating the employees, so different types of employees, records clerk, human resource manager, so on and so forth. The number of employees at the beginning of the year, the number of employees who have joined, the number of employees who have left, and number of employees at the end of the year. Now, before we go too much into the detail and read what is there in the table, at a very broad level they have given some question marks. So we have a lot of question marks, that means these are the missing numbers maybe which we need to find out. Also, they have given that certain employees are transferred from the subsidiary company. So this is the company HR, it has a subsidiary. From the subsidiary, certain employees have come to HR Limited, and likewise certain employees are transferred to the subsidiary company. So some employees have come from subsidiary, some employees have gone to the subsidiary. See, at a broad level, when we are talking about labor turnover ratios, we can calculate this at a group level or we can calculate it at the company level. Now, since they have given us information only about the company, so we are going to calculate at company level, and all the employees that are getting transferred internally from subsidiary to the company or from the company to subsidiary, we are going to treat them as actual joinees and separations only. So people going out from this company to subsidiary, we will call them as separated. People coming from subsidiary to this company will call them as new joinings. We will treat them as if they are new to the organization only. If we were to calculate it at a group level, then it would have been a different story. Alright. So let's look at the table in detail. Now when we talk about the employees, so there are these record clerks where they are saying at the beginning we had 810, the number of record clerks joined 620, I stand corrected, 1620, and left are 90. At the end of the year we have 2340. Let's do a small cross check. So opening 810 plus joined 1620 minus left 90, we are getting 2340. Alright, so that fits our logic. Now, human resource manager, opening they have not given, joined left at the end. Can we calculate what is the opening? Let's try. So, at the end of the year we are having 60 and newly joined were 30. So, let's subtract that, and how many have left? 90. So, let's add that. That means 120 are there at the beginning of the year. How did we get this 120? Sir, closing plus the people who have left minus the people who have joined. If we were to go from opening to closing, how would we go? Sir, opening plus the joinings minus the people left is closing. So, we are just coming the other way around. Let's cross verify. 120 if we say are at the beginning of the period, plus joined 30, that makes it 150, minus left 90, that makes it 60 at the end. So, our logic is correct. So, this ways we can find out how many employees are there at the beginning of the period. Now, we can do that to fill all the question marks. Before we fill that and before we put in the numbers, let's read further into the question and see if there is some important information which additionally we need to consider. So, I am going directly below the table. Now, at the beginning of the year, there were total of 1158 employees. So, the total number of employees at the beginning of the period for this company were 1158. Maybe this also we will have to use in order to find out certain missing numbers. So, at the beginning of the period, there were total 1158 employees on the payroll of the company. The opening strength of legal secretary, attorney staff and associate attorney. So, these three put together, what are they talking about them? So, these were in the ratio of 3:3:2. So, probably where they are leading us is they have given us total number of employees at the opening. Alright, some missing figures are there, we will find out whatever we are able to. Balance if we calculate, that will be for legal secretary, staff attorney and associate attorney. These three are in the ratio of 3:3:2. So, that information also we will have to use. Next, the company has decided to abandon the post of litigation attorney and consequently all the litigation attorneys were transferred to the subsidiary company. So this litigation attorney, what they are saying is, we had certain number of employees at the opening which they have not given, it's a question mark, but they have abandoned, and whatever were there they have transferred to the subsidiary. How many have they transferred to the subsidiary? 90. So can we say that litigation attorney at the beginning of the period were 90, we abandoned and we transferred everything to the subsidiary company. So 90 were there at the beginning, we can say 90 left and closing is 0 because everyone we have transferred. Next, the company and its subsidiary are maintaining separate set of books of accounts and separate personnel department. That is what we were discussing. So both the companies are separate. If we were calculating at group level, we would ignore the internal transfers. But since we are calculating for HR Limited, we will consider them as fresh joinings and separations. All the transactions between all the movements between the subsidiary and this particular company. You are required to calculate the labor turnover rate using the replacement method and the separation method. So both the turnover ratios, labor turnover ratios we need to compute, and they are asking us to verify the labor turnover rate calculated under flux method by Mr. H. So let's first prepare two basic working notes, understand what are the missing numbers, how many employees are there at the beginning of the period, at the end of the period, how many are leaving the organization, that is to say separations, how many are joining, out of that joining, how many are fresh joinings, how many are replacements. So if we have these basic workings in place, then we will be in a better position to calculate all the two ratios and also to verify the flux calculation. So friends, let's start with the first working where we kind of calculate and determine what are the number of employees at the beginning of the period and at the end of the period. Working note number 1, number of employees at beginning and at end of year. Alright, so let's give a table where we indicate the category, the number at the beginning and the number at the end. And let's be very careful, methodical and systematic while we are doing this. So, category at beginning, at end. First type, records clerk. Now, what is the information available? They are saying at the beginning we are having 8, 10, there are 16, 20 joinings, 90 left and 2, 3, 4, 0 at the end. So, entire information is available, we do not need to compute anything, let us take down these numbers. So, 8, 10 at the beginning, 2, 3, 4, 0 at the end. Next, human resource manager or simply HR manager. Now, at the beginning they have given question mark, they have given some data for the joinees left and at the end. So, we had calculated and arrived at some number, let us show that again here. So, in terms of HR manager, at the end we are having 60, let us add the number of people who left 90 and let us deduct the number of people who joined during the year in order to arrive at the opening. So, 60 plus 90 minus 30, we have 120 at the beginning and at the end we are having 60. Next, legal secretary. See, now in terms of legal secretary, they have given us only the number of people who have joined and left is given as 0, but both the opening is unknown and the closing is unknown. So, if both is unknown, see for HR at least we knew 3 numbers, one we need to find out. So, we found out, but here 2 unknowns, only one equation, we will not be able to find it out. They have given some additional information. They have said the legal secretary, the staff attorney and the associate attorney. These three are in the ratio of 3:3:2. So we will have to find out the total of these three, and once we have the total, then we will have to use them and kind of bifurcate them in 3:3:2 proportion in order to find out what they are. So for now, let's just keep it blank, and we will come back to it after we have kind of understood all the other information in the question. So for now, let's hold it. Next, we have senior staff attorney. Now in terms of senior staff attorney, they have given us the opening 6, they have given us the closing 18. Next, senior records clerk, they have given us 12 as beginning, and at the end of the year we have 51. So let's note down. Next, litigation attorney. Now in terms of litigation attorney, they have given the beginning number as a question mark, but then they have said that they are going to abandon this, and whatever were there, they have transferred to the subsidiary. The number of employees transferred to the subsidiary were given as 90. That means at the beginning we are having 90, and at the end we are having 0. There were no joinings and no separations as far as litigation attorney was concerned. Now, if we add up all of this, we are supposed to get the total number of employees. Now these total, they have given it as 1158 at the beginning of the period. That means if we take 1158 and remove all the others, we are going to get the total number of legal attorney, staff attorney and associate attorney, and this we will have to separate in the ratio of 3:3:2. So let's do that math. So 1158 minus 810 minus 120 minus 6 minus 12 minus 90, we get 120. So 120 is going to be our balancing figure, and these 120 is to go in the ratio of 3:3:2. So 3 plus 3 is 6 plus 2 8. So 120 by 8 will be 15. 15 into 3 45 and 30. Can you just total up and check once if all of that is correct? So 810 plus 120 plus 45 plus 45 plus 30 plus 6 plus 12 plus 90. How did we get this 45, 45, 30? Sir, 1158 is the total number that they have given. We have all the other information except for these three. If we deduct, we get the total balancing figure as 120, and that we have split in the ratio of 3:3:2 as required in the question. Alright, so with that we have the numbers at the beginning. Now let's also fill up the numbers at the end for these three. Now if we look at the legal secretary, we have 45 at the beginning of the period. They have said 90 have joined us and no one has left. So the closing is going to be 45 plus 90, 135. Alright, let's look at the staff attorneys. So opening we have 45 plus joined 30, left 30. So closing is also going to be 45. Next, let's look at the associate attorney. Now in terms of associate attorney, how many we have in the opening? We have 30. How many have joined us? The number of employees joining is also 30, so that makes it 60. How many have left the organization? 0. So we don't have anyone who has gone out. However, in the second table, they have said the employees transferred to the subsidiary. One was litigation attorney and the second was associate attorney. How many employees have been transferred? 15. So that we need to consider as separations, and that will be minus 15. That makes the closing number as 45. So this is how we calculate the number of employees at the beginning of the period and at the end of the period. See, the question as such is not difficult. They are asking us to compute only the turnover ratios, which is very simple and straightforward. Now they have created complications by two things. One, giving us the missing numbers, and then that unnecessarily they are saying number of employees transferred to subsidiary and transferred from subsidiary. That also we have to consider as joinings and separations. So that is what we are doing. We are taking the opening plus the new recruitments plus the people transferred from subsidiary to this company minus people leaving minus people transferred from HR Limited to the subsidiary. So additional calculations we are having to do in order to arrive at the number. That's it. Alright. So let's total up. What are the number of employees at the end? 2340 plus 60 plus 135 plus 45 plus 45 plus 18 plus 51 and 0. So that makes it totally 2694. So this is the first working. Friends, in this very simple question, they have created unnecessary complications and they are trying to test the patience of student. That too in a pressure cooker scenario like the examination, where they have given so many different types of employees, and the names of those employees are also so confusing. Attorney, senior attorney, legal attorney, senior staff attorney, etc. etc. So the students need to be very careful, and the level of concentrations required are going to be very high, so that we don't make not conceptual mistakes but calculation mistakes and misreading the names, numbers, etc. For the sake of simplicity and clarification, what I would like to do is I would like to go back to the table where they have given us certain question marks and update those question marks, fill the information, make sure that we have understood the information correctly, and only then proceed with further calculations. Alright, let's do it quickly. So they have given the number of employees at the beginning, joined, left, and at the end. We know that we have to do adjustments for employees who are transferred from the subsidiary to the subsidiary. So keeping that in mind, let's update the table. We have also prepared one working where we have calculated the employees at the beginning at the period and at the end of the period. So let's combine everything and put it in this table. Let's update the table. So record clerk, all information is there. Human resource, we said we have already found out 120 at the beginning, 30 joined, 90 left, and 60 at the end. Legal secretary, we have found out totally 120 for these three categories, 3:3:2, 45, 45 and 30. Alright. Then for legal secretary, we have 45 at the beginning of the period. Add 90 joined, left nothing, and none of the legal secretaries have been transferred to the subsidiary company also. So 0 people left. We have 135 as the closing. Staff attorney, 45 opening, 30 joined, 30 left. So closing will be 45. No transfers in terms of staff attorney either from subsidiary or to the subsidiary. So closing will be 45. Associate attorney, opening 30, joined 30, that makes it 60. Left they have not given anything. But in terms of associate attorney, the transfer to subsidiary were 15. So these 15 will be considered as people left. And that is how 30 plus 30 minus 15, you are getting the closing as 45. The numbers are reconciling. Then senior staff attorney, opening 6, closing 18, joined 0, left 0. How did this 6 become 18? Sir, they have transferred 12 from the subsidiary. So because of that 12, we are getting, 6 is becoming 18. So for our discussion, let's take it as 6 plus joining 12. Closing 18, left is 0. Senior records clerk, sir, opening 12, closing 51, but they have given in the table joined 0, left 0. How did that happen? That happened because 39 were transferred from the subsidiary. So that also let's update in the joinings. So 12 plus 39 makes it 51. Litigation attorney we have already updated, opening was 90, entire 90 we have abandoned and transferred to the subsidiary. So 90 you transfer and that makes it 0 at the end of the period. So this is the table that we are having. Now let's prepare a second working where we clearly indicate how many people, how many employees have separated, what are the total joinings, and out of those total joinings, how many we can call it as replacements and how many we can call it as fresh joinings or new recruitments. For example, now if you look at the records clerk, we have 810 at the beginning, 90 people have left the organization during the year and 1620 have joined. So out of these 1620, we can have 2, the number of replacements. So first 90 joinings are for replacing the 90 who have left and balance are going to be new recruitments. So that breakup also let's indicate as a working note. Once we have this table in place, then we can easily calculate what the other items are. Let's do that. Working note number 2. Number of employees separated, replaced and newly recruited. Friends, what is the difference between replaced and recruited? People who leave, if we fill those many positions, then it is called replacement. Over and above that, if we add, then it is going to be called as newly recruited. Alright. Category separations. Total joining. We will break it into replacement and new recruitment. Alright. Records clerk. How many people have left? 90. How many people totally joined? 1620. Out of these 1620, 90 we will call it as replacements and balance 1620 minus 90, 1530 will be your new recruitments. HR manager, 90 separations, 30 have come, 30 have gone. Then we have total joinings as 30. Now all these 30 are going only towards replacements. There are no fresh recruitments. Next, legal secretary. How many legal secretaries have left? 0. How many total joinings are there? 90. Since none of them have left, no replacements, all of them will be new recruitments. Next, staff attorney. Number of separations 30. Total number of joinings 30. All of them will be towards replacement, no new recruitments. Next, associate attorney. How many associate attorneys have left? 15. How many total joinings? 30. That means 15 towards replacement, 15 towards new joining. Next, senior staff attorney. How many left? 0. How many total joinings? 12. So, no replacements, all of them are fresh. Next, senior records clerk. No separations, total joinings 39. So, all of them will be towards new recruitments. And lastly, litigation attorneys. Separations 90, no new joinings. So, let us add up. So, we have 90 plus 90 plus 30 plus 15 plus 90, 315 separations totally. How many total joinings are there? 16, 20 plus 30 plus 90 plus 30 plus 30 plus 12 plus 39. 1851 total joinings. Then 90 plus 30 plus 30 plus 15, 165 total replacements, and 1851 minus 165, 1686 are the new recruitments. Now, with these basic numbers in place, we can now proceed to actually compute the requirements in the question. So, friends, let us now go into the turnover calculation. So, bit A, labor turnover rates. So, first let us look at the replacement method. So, what does this method talk about? The number of replacements done during the year divided by the average number of employees into 100. So, now how many replacements we have done during this year? We have done 165 replacements. So, this will be 165 divided by, we want to find out the average number of employees. Average number is nothing but opening plus closing by 2. So, that will be more like 1158 plus 2694 divided by 2 into 100. So, this will be 165 divided by, let us do this calculation, 1158 plus 2694 divided by 2, 1926. These are the average number of employees into 100, which is 8.57%. So, the replacement method labor turnover ratio is 8.57%. Let us go by the separation method. So, here instead of the number of replacements, we will take number of separations divided by average number of employees into 100. So, number of separations is 315. So, 315 divided by average 1926, which we just calculated, into 100. So, 315 divided by 1926 into 100 will be 16.36%. Now, let us go to the second bit. Now, in the second bit, they are asking us to check whether Mr. H has computed the correct turnover ratio as per flux method. So, first let us understand what flux method is, and then let us check whether he has computed correctly or not. Now, flux method, it says let us consider the number of replacements as well as the number of separations and then compute what the turnover ratio is. So, it takes into consideration the change in the composition. But there is also one more new concept that is evolving, which is, see, number of replacements and number of separations we will consider, but if there is a significant change in the level of workforce and there are a lot of new joinees, then ignoring the number of new joinees may not be the right way. So a modified flux can also be computed, wherein we say let's take the total number of total number of joinings, which will be your replacements plus the new recruits and the separation. So just instead of replacement plus separation, instead of the replacement alone, we will take replacements plus new recruits, which in a way is the total number of joinings, and then calculate flux. So we will do both the methods and we will see what exactly has transpired. B. Flux method. So normally what we do, flux method, we will take number of separations plus number of replacements divided by average number of employees into 100. So number of separations is 315, number of replacements is 165, divided by 1926 into 100. So 315 plus 165 divided by 1926 into 100, we get 24.92%. In fact, this is similar to what Mr. H had calculated. So about 24.92%. So what he has done is he has taken separation plus replacements. But here, since there is a significant change in the composition and there are a significant new number of employees joining in, we will be using an updated version of the flux method, where we say the turnover ratio is number of separations plus number of replacements plus number of new recruits. So these are also changing the composition of your workforce divided by average number of employees into 100. Friends, if I take these two items, so if I take the replacements and new recruitments, these are nothing but the total joinings, and these are also in technical terms called as number of accessions. So if we were to rewrite the flux method calculation, I can as well write it as number of separations plus number of accessions by average into 100. Alright, so let's now look at that calculation. So it will be number of separations 315 plus number of replacements plus new joinees, total number of joinees 1851. You can also break it up and write, no problem. These are nothing but the number of accessions divided by 1926 into 100, which will come to 112.46%. So our friend Mr. H has done it the old way, we are doing it the modified way, because there is a significant change in the composition of the workforce because of the new joinings coming in. Friends, let's look at a question from absorption costing, overheads. SE Limited manufactures two products, A and B. The company has budgeted factory overheads amounting to rupees 36,72,000 and budgeted direct labor hour of 1,80,000 hours. The company uses predetermined overhead recovery rate for product costing purposes. So what are they saying? They are saying the practice of the company is they use a predetermined overhead recovery rate. What does it mean? It means that we are going to estimate the total number of overheads at the beginning of the period, and also we are going to estimate the level of activity at the beginning of the period, and based on these two estimates we are going to calculate the predetermined overhead recovery rate. In this case, it is 36,72,000 the budgeted expenditure divided by 1,80,000 the number of hours. 20.40 is the predetermined overhead recovery rate per hour. Alright. Next, the department wise breakup of the overheads and direct labor hours were as follows. So they have given us a table wherein they have indicated the particulars, the budgeted overheads, the budgeted direct labor hours and the rate per direct labor hour department wise. So they have given us department pi and department v. So the amount of budgeted overheads and the labor hours is given. They have also indicated the rates. Wonderful. Total, if you see, it is same as what is the overall budget. Additional information. Each unit of product A requires 4 hours in department pi and 1 hour in department Q. Also, each unit of B requires 1 hour in department pi and 4 hours in department Q. This was the first year of company's operation. There was no WIP as at the end of the year. What are they saying? Since it is the first year, there is no opening stock either of finished goods or of WIP, and at the end of the year they are saying there is no closing WIP. However, 1800 and 5400 units of product A and B were at hand at the end of the year. So we have some closing stock of finished goods at the end of the year. Alright. The budgeted activity has been attained by the company. So whatever was budgeted in terms of the budgeted labor hours and the budgeted expenditure, those budgets were attained. We were as per the plan. You are required to determine the production and sales quantities of both products A and B for the above year. So the first requirement that they are having is find out how much we have produced and how much we have sold. See, how can we find it out? Generally, if they have given us opening stock, closing stock and either production or sale, we can find out the remaining number. But here they have given us only the information that there is no opening stock, there is certain closing stock, production and sales, both they have not given, both they are asking us to find out. How can we do that? We can definitely do that because we have certain information which will enable us to calculate the production. What is that information? Sir, we have the capacity available in each department that they have given, and they are also saying how much time each of the product A and B requires. If we can use this information, we will be able to calculate how much is the production. From this production, if we deduct the closing stock, we can arrive at how what is the sales. So that is very much possible. That is what we need to do in bit number 1. Second, ascertain the effect of using a predetermined overhead rate instead of department-wise overhead rates on the company's income due to the effect of stock value. Very interesting bit. Students, you will be able to answer this only if you have understood the concept of overheads correctly and if you have followed each and every concept that we have learned during our classes. See, to summarize the basic concept and impact of overheads, let me give you a quick recap. See, anything that is directly related to the production activity, it is going to be called as direct expense. That will be direct material, direct labor, direct expenses. So these are direct. This will go directly into the product and will always be a part of your cost of production. But something that is direct, not directly attributable, we call it as indirect. So it can be indirect material, indirect labor, indirect expenses, and all these 3 indirect items put together, we call them as overheads. Now, whether the overheads are going to get included as a part of the cost of production or they are going to be treated as a period cost depends upon the method of costing that we are using. Also, the manner in which the overheads are going to get absorbed into the products depend upon the method that we are using. So, if we were to use the standard, the traditional overhead absorption costing method, then we will use a single predetermined overhead recovery rate. The answer will be different. If we were to use a or rather a department wise rate, then the answer would be different. If we further apply the concept of activity based costing system in order to allocate and distribute the overheads, the answer would be different. So what will form part of your cost of production depends upon the method in which you are absorbing the overheads and the method of costing, the technique of costing that we are using. If we were using absorption, it would be different, activity based, it would be different, marginal, it would be different. But what we need to remember is a golden rule. Say, just assume there is no opening stock, there is no closing stock. Whatever has been produced has been sold during the year. Then whether you absorb using activity based or two department based or single recovery rate based, whatever you do, all the items of income and expenditure are going to get debited in the same period only. The profitability will not get impacted. There will be no impact on the profitability. However, if there is some opening stock or closing stock, there will be impact of overheads being transferred from one period to another, and that is going to impact your closing stock valuation, and that is going to also impact your profitability, and that is precisely what they are asking in this question. Let's look at the requirement again. What are they asking? Ascertain the effect of using a predetermined overhead rate instead of a department wise overhead rate on the company's income due to its effect on the stock value. So we will have to calculate what is that component of overhead which is included in the closing stock value as per the traditional method, and what is the value as per the two department overhead recovery rate method. What is the difference between the two? That is the answer to our question. That is the answer to the question of how much is the impact on the profitability during the year. So we will have to very carefully, in a stepwise systematic manner, do that calculation. Next, calculate the difference in the selling price due to the use of predetermined overhead rate instead of using department wise overhead rates. Assume that the direct cost, material and labor cost per unit of products A and B were rupees 25 and 40 respectively, and the selling price is fixed by adding 40% over and above these costs to cover profit and selling and administration overhead. So if we were using the direct cost plus 40% in order to cover all of that, what would be the difference in the selling price value that we need to compute? Alright, so let's start with certain basic workings and then in a stepwise manner approach the entire question. So friends, let's start with the basic working where we identify what is the number of units that we have produced and what is the sales. Working note number 1, and this corresponds to the requirement in bit 1, which is calculation of production and sales. Alright. See, let's understand one thing. How many units can we produce? Let's say if there were 1,80,000 hours available and there was only one product X, assume, which requires 10 hours per unit. How many can you produce? Can you produce infinite number of units? We cannot. We will have to restrict ourselves to the number of hours available. That is 1,80,000 divided by 10. So maximum what we can produce will be 18,000 units. Likewise, here also in the present situation, in the question on hand, we have two products, we have two departments and we have certain restricted number of hours. So the entire calculation as to how many units can be produced has to be restricted by the limitation, that is the number of hours available in each department. Now there are two products, product A and product B, and then there are two departments, Pi and Q. Product A requires 4 hours in department Pi and 1 hour in department Q, whereas product B requires 1 hour in Pi and 4 hours in Q, and the total capacity available in Pi is given as 90,000 hours, in Q given as 90,000 hours. So the maximum that we can make cannot exceed 90 and 90. Now for the sake of computation, let's assume number of units of A be X and B be Y. Therefore, can we say 4 x plus 1y. Why? Because x is A is x number of units and B is y number of units. 4x plus 1y should be equal to 90,000 and x plus 4y should also be equal to 90,000. These are the two equations that we have and we need to solve them simultaneously. So, if we solve them, what do we get? Let us say this is equation 1, this is equation 2. I am multiplying equation 2 by 4. So, we have 4x plus 1y is equals to 90,000 and 4x plus 16y is equals to 3,60,000 minus 15y is equals to minus 2,70,000. Y will be 2,70,000 divided by 15, which will be 18,000 units. Now, let us substitute y in any of the equation, let us say equation 1 and find out x. Therefore, 4x plus y equals to 90,000 or 4x plus 18,000 is equals to 90,000. 4x is equals to 90,000 minus 18,000, 72,000 and x is equals to 72,000 by 4, 18,000. So, therefore, number of units produced will be A 18,000, B 18,000. Now, for A and B they have given us some closing stock. If we deduct the closing stock from this, we will get the number of units sold. Let us also indicate that. Therefore, sales is equals to production minus closing stock. In case of A, it will be 18,000 minus 1800 units, which is 16,200 units, and in case of B, 18,000 minus 5,400 units, which will be 12,600 units. So, these are the quantities that are produced and sold and also the closing stock. So, this is the requirement as far as bit 1 is concerned. Now, let us go to the bit number 2, wherein we have been asked to calculate what is the impact in the value and profitability due to the overheads method, overheads absorption method that we are using. Alright, let me give a small working note number 2, which is calculation of predetermined overhead recovery rate. Overhead recovery rate equals to budgeted overheads by budgeted number of hours, which is equals to how much is the total cost given to us? 36,72,000. So, 36,72,000 divided by total number of hours 1,80,000. 3672 divided by 1,80,000, we have rupees 20.4 per hour of direct labor, and then department wise rates they have anyways given. Let us go directly to the second bit requirement. Effect of using predetermined overhead rate on company's profit and value of closing stock. Alright, see friends, what is going to go into the value of closing stock? Your direct cost anyways will get included and the overheads that we are absorbing as the cost of production. Now whether you do overhead absorption based on predetermined rate or on 2 department rate, the direct cost will remain as it is. So that we are not even considering at this point in time, because it is not going to create any difference in valuation. What we are going to consider is the impact of overheads on the closing stock. So let's indicate that. Product, closing stock quantity, overhead included using predetermined overhead rate and overhead included using 2 department overhead rate. What is the difference, or in short, what is the impact on P&L? Product A. So we are having 1800 units as closing stock. Now how much overhead will get included? See, each unit of product A is taking how many hours? 4 hours in department pi and 1 hour in department Q. So it is taking 5 hours. So the overheads that will be included will be 1800 units into 5 hours, and our predetermined overhead rate will be 20.40 per hour. So that will come to rupees 1,83,600. Whereas if we are using the 2 department rate, we will have to calculate separately for 4 hours in department pi and 1 hour in department Q. So let's indicate that as well. So in department pi, it will be 1800 into 4 hours into what rate they have given? 28.80. So that will come to 2,07,360, and in department Q it will be 1800 into 1 hour into the rate that they have given is rupees 12. So this will be 21,600, and if we add up, it will be 2,07,360 plus 21,600 rupees 2,28,960. Now the most important part. See, if we go by the single overhead predetermined rate, the overheads included in closing stock is 1,83,600, and if we are to go by this other method, it is going to be 2,28,960. So currently, is our closing stock understated or overstated? So in comparison to the 2 department rate method, our current closing stock is undervalued. That means will our profit be less or more in comparison to the other method? See, in our P&L we have the opening stock, purchases, sales and closing stock. If the closing stock value is high, your profit is high. If the closing stock value is less, your profit is less. So currently, alright, your closing stock value is less, and by how much is this less? It is less by 1,83,000 minus 228,960, 45,360. That means your current value of closing stock is less by 45,360 and your profitability is lower by 45,360 on account of product A. Likewise, let's indicate the calculation for product B. For B, we are having 5,400 units as closing stock. So this will be 5,400 into 5 hours into 20.40. It will be 5,50,800. Then in department pi, 5,400 into 1 into 28.80. That will be 1,55,520, and department Q, it will be 5,400 into 4 into 12. So 5,400 into 12 into 4, 2,59,200, and if we take the total, it will be 4,14,720. That means currently your stock is overvalued, and overvalued by 5,58,000 minus 4,14,720, that is 1,36,080. Since your stock is overvalued, that means your profit is also more. So this is the impact, and if we add up, you are reporting more profit to the extent of 90,720 on account of the single rate method. Now friends, the next requirement in the question is that we need to calculate what is the impact on the selling price by using the two overhead recovery methods, and what is the difference, whether we have underpriced or overpriced. So for that, what we will do is, first we will prepare two working notes wherein we calculate the selling price under the old method, the selling price under the department wise overhead recovery rate method, and then we will give a small summary where we give the comparison of the two methods. Working note 3, sales price using predetermined rate. Product A, product B. Direct cost. So they have already given material and labor as 25 and 40. Add production overhead. So for A, it will be 5 hours into 20.40. Likewise for B, it will be 5 hours into 20.40. So 5 into 20.4, 102. 102. If we add up, we get the cost of production as 25 plus 102, 127 and 142. To this, let us add 40% margin, 50.80, 56.80. So the selling price will be 177.80 and 198.80. Alright, then let's go to the second method. So that will be working note number 4. Selling price using two department overhead rates. Product A, product B. Direct cost, which is your material and labor, 25, 40. Add production overhead. For pi, A will be 4 hours into 28.8, B will be 1 hour into 28.8, and for Q, A will be 1 hour into 12, B will be 4 hours into 12. So let's do the calculation. So 4 into 28.8, 115.20 and 28.80, 12 and 48. So the total production cost will be 25 plus 115.2 plus 12, 152.20 and 40 plus 28.8 plus 48, 116.80. To this we need to add 40% margin. So 152.2 into 0.4, 60.88 and 116.8 into 0.4, 46.72. So the selling price will be 152.2 plus 60.88, 213.08 and 116.8 plus 46.72, 163.52. So now that we have the numbers in place, let's prepare the comparative and say whether it is underpriced or overpriced. So this is your bit number 3 or requirement number 3, effect on selling price. Product A, product B. Selling price if predetermined overhead recovery rate is used, 177.80, 198.80, and selling price if 2 department overhead recovery rate is used, 213.80 and 163.52. The difference 35.28, 35.28. Therefore, product A is underpriced and product B is overpriced. So this is the comparison and answer that they are looking at. So this is how systematically we are going to approach and solve this question. Friends, let's look at a question from activity based costing. The profit margin of baby hair clips company were over 20% of sales producing brown and black hair clips. During the last year, green hair clips has been introduced at 10% premium in selling price, after the introduction of yellow hair clips earlier 5 years back at 10/3% premium. However, the manager of the company is disheartened with the sales figure for the current financial year as follows. So they have given us a traditional income statement wherein they have indicated for the 4 products in the total, brown, black, yellow and green, the sales, the material cost, the direct labor, the overheads, which is 3 times that of the direct labor. So direct labor is 40 lakhs, overheads is 1 crore 20 lakhs. They have indicated the total operating income, which is 40 lakh 74,000, and then they have calculated the return on sales as percentage, 13%, 13.3%, 14.8, 18.2 and overall 13.5%. It is a known fact that customers are ready to pay premium amount for yellow and green hair clips for their attractiveness, and the percentage returns are also high on new products. At present, all of the plant's indirect expenses are allocated to the product at 3 times of the direct labor expenses that we have seen in the question also, 40 lakhs and 1 crore 20 lakhs. However, the manager is interested in allocating indirect expenses on the basis of activity cost to reveal the real earner. Now, what is the manager wanting to do? He wants to adopt activity based costing system in order to identify which is that star product, the real earner. He provides support expenses category wise as follows. Indirect labor 40 lakhs, labor incentives 32 lakhs, computer systems 20 lakhs, machinery depreciation 16 lakhs, machine maintenance 8 lakhs, energy for machinery 4 lakhs, total 1 crore 20. See, this 1 crore 20 is nothing but 3 times your direct labor. Your direct labor was 40 lakhs, 3 times of that was 1 crore 20, that same 1 crore 20, but they have broken it down in terms of activities. Now let us read further into the question. He provides the following additional information for accomplishment of his interest. Incentives to be allocated at 40% of labor expenses, both direct and indirect. Now, how much is the incentives? Incentives is rupees 32 lakhs. They are saying this 32 lakhs is nothing but 40% of direct labor and indirect labor. How much is direct labor? 40 lakhs. 40% of 40 lakhs is 16 lakhs. Likewise, indirect labor is also 40 lakhs. So, another 16 lakhs. 16 plus 16, 32. So, again, incentives are to be allocated at 40% of labor expenses, both direct and indirect. So, that will be the basis of allocation. Indirect labor are mainly involved in 3 activities. About half of the indirect labor, that means 50%, is involved in handling production runs. So, half time of indirect labor is going in handling production runs. About 40% is required just for the physical changeover from one color hair clip to another color, because yellow hair clips require substantial labor for preparing the machine as compared to the other color hair clips. So, they are saying 50% goes in machine running, 40% goes in just the setup, changing from one color to another color, and the balance 10% time, the remaining 10% of the time is spent for maintaining records of the products in 4 parts. So, 10% is for maintaining the normal records for each of the 4 colors. So, we will have to keep this in mind and then distribute the indirect labor cost, and what along with this indirect labor cost we are going to distribute is the incentive on the indirect labor. See, incentives are both on direct and indirect. Alright. So, direct labor related incentive we will charge it to the product directly, and the incentives in relation to indirect labor we are going to add it to indirect labor, and wherever the indirect labor is used, that is 50% production runs, 40% setup, 10% for maintaining records, we are going to use that same proportion in order to distribute. In fact, even simpler, we will add this incentives in relation to indirect labor to the indirect labor itself before doing the allocation. Alright. Another amount spent on computer system of rupees 20 lakhs is for the maintenance of documents relating to production runs and record keeping of the 4 products. In aggregate, approximate 80% of the amount expended is involved in the production run activity, and approx 20% is used to keep the records of the product in 4 parts. So, even in the computer spend, the computer systems cost, 80% towards production run activity, 20% towards record keeping of the 4 products. So, we will use that basis for allocating. Other overhead expenses, that is machinery depreciation, machinery maintenance, energy for machinery are incurred to supply machine capacity to produce all the hair clips, practical capacity of 20,000 hours. So, the remaining 3 expenses, which is machinery depreciation, machine maintenance and energy, it depends upon the machine running hours, and that capacity is given as 20,000 hours. So, based on these 20,000 hours, we are going to apportion and allocate and absorb the costs. Next, activity cost drivers. So, the sales volume has been indicated for each of the 4 products. The selling price is given, the material cost is given. They have given the machine hours per unit. So, how much time each of the unit is going to require, multiply it with the number of units, you will get the total of 20,000 hours. Production runs. So, the number of runs carried out for each of the product, totally 300 runs. Setup time per run in hours. So, every time you do a run for brown, you will require 4 hours, for black 1 hour, and so on and so forth. So, if you were to calculate what is the total setup time, it will be 4 into 100, 400, 1 into 100, 100, 6 into 76, 456, 24 into 4, 96. So, this will be the total setup hours. And if I take the total 400 plus 100 plus 456 plus 96, 1052 hours totally is the setup time. This is the basis that we will use in order to absorb the setup cost. You are required to calculate bit number 1 operating income, and operating income as a percentage of sales using activity based costing system. So if we were to absorb all the indirect expenses of 1 crore 20 using ABC, how would the P&L look like, how would the operating income look like, and what would be the product wise percentage of operating income to sales. Second, state the reasons for different operating income under traditional income system and activity based costing system. See, the moment you are assigning cost based on the usage, based on the activity, based on the level of activity cost drivers, it is going to reflect the amount spent more logically and more rationally. So that will be the main underlying difference why we are going to have a different calculation in terms of operating income and percentages. So now let's directly jump into the calculations. So friends, let's bit by bit start preparing working notes, and then let's see how we can solve the question. But before we actually jump into it, let me give you an overview of what we usually do in activity based costing system. See, usually we have some indirect expenses which we call as overheads. Now these overheads, we try to break it up into important activities. For each activity, we find out what is the activity cost pool. For each of the activity, we identify what is the cost driver, or more specifically what is the activity cost driver. Then for each of the activity cost driver, we find out what is the level of activity of the activity cost driver, and finally we find out activity wise fixed overhead recovery rate. Now this working that we prepare is usually the heart and soul, it is the crux of the entire activity based costing system. And once we have these activity wise overhead recovery rates, then we go into something called as preparing the activity based cost sheet. So ABC based cost sheet, where we take the direct cost, the direct expenses, which is basically the prime cost, and then we add all the overheads based on the activity cost drivers, arrive at the total cost. So that is what we usually do in activity based costing system. So here in this particular question, the challenge that we are having is first identifying what the activities are, identifying what is the activity cost pool, identifying the cost driver, the level of activity, and activity wise overhead fixed overhead recovery rates. So this is where the challenge is lying in the question. Once we crack this, automatically the rest of the solution is going to become easy. So let's focus on these activities. Now, what are the important activities that they have given? See, in the question, we have certain costs which are related to production runs. We have certain costs which are related to setup, and we have other costs which are related to machine hours or machine activity. And lastly, we have certain costs which are related to the number of parts. Now, for example, your indirect labor and incentives related to indirect labor, what are they saying? They are saying 50%, 40%, 10%, 50% for production runs, 10%, 40% for setup, and 10% for number of parts. Likewise, you have one cost related to computer systems, that is 80% for production runs, 20% for number of parts, and then all the other cost, which is machinery depreciation, machinery maintenance, and energy. These are all machine activity related, that goes to machine activity, and that is the main activity. So if we can identify all the cost in relation to these 4 activities and do rest of the steps, we will be in a very good position to solve the question. So let's start with this background. Working note number 1. treatment of incentives. Now the total incentives of rupees 32 lakhs, which is basically at 40% of direct labor and indirect labor, we are going to break it into two parts. One which is based on 40% of direct labor, it is going to go as a prime cost and it is going to get distributed directly, whereas the rest 40%, so this 40% of direct labor is 40 lakhs, it comes to rupees 16 lakhs. This 16 lakhs is going to go directly. The rest 40% of indirect labor, which again is 40 lakhs, 40% of that will be rupees 16 lakhs. This gets added to indirect labor, and wherever we are using this indirect labor, in that same proportion we are going to absorb and distribute. Alright, so that is how we are going to treat the first 32 lakhs of incentives. Working note number 2. Distribution of indirect labor including incentives on indirect labor. So, indirect labor is equals to 40 lakhs, add incentives at 40%, 16 lakhs, total will be 56 lakhs. Now, this 56 lakhs will go into 3, 50%, 40%, 10%. 50%, that is 28 lakhs for production runs, 40%, that is 22 lakhs 40,000 for setup, and 10%, that is 5 lakh 60,000 for number of parts. So when we actually prepare the table where we show what is the activity cost pool and the activity wise overhead recovery rate, we are going to consider these numbers. Working note number 3, computer systems cost. So the total cost of computer systems is 20 lakhs. They want us to divide it into two, 80%, 20%. 80%, that is rupees 16 lakhs, goes to production run, and 20%, that is 4 lakhs, goes to number of parts. So I think with this basic information in place, we can go to the next step, which is calculating activity wise overhead recovery rate. Calculation of activity wise overhead recovery rate. Activity cost pool, cost driver, level of cost driver, activity wise overhead recovery rate. Alright, first activity, production run. This is made up of indirect labor including incentive. So from your working note, we have determined that 28 lakhs belongs here. Second, computer systems. About 80%, 16 lakhs belong here. So 28 plus 16, 44 lakhs is the total activity cost pool. For this, the activity cost driver is the number of production runs, which are given as 300. Therefore, 44 lakhs divided by 300, rupees 14,666.67 per run is the overhead recovery rate. Second, setup. So from your working, your indirect labor, 40% of that was going for setup and 40% was 22 lakhs 40,000. This is on number of setup hours, and while reading the question we have computed the total number of setup hours as 1052, which is nothing but 100 into 4 plus 100 into 1 plus 76 into 6 plus 24 into 4. The number of production runs into the time per production run. So 22 lakhs 40,000 divided by 1052, we get rupees 2129.277 or 28 per setup hour. Third, machine operation. So under machine operation we basically have machine depreciation, machine maintenance and energy for machine. So the cost will be 16 lakhs, 8 lakhs, 4 lakhs. $28 lakhs. The activity driver here is the number of machine hours which are given as 20,000. So the rate we get rupees 140 per machine hour. And lastly, we have number of parts, wherein some portion of indirect labor including incentives 5,60,000 was coming, and 20% of your computer system cost. See, all these numbers are coming from our working notes. 4 lakhs was coming, totally 9,60,000. The basis or the driver here is number of parts which are 4. So 9,60,000 by 4, 2,40,000 per part. So this is the breakup of the or the calculation of the activity cost drivers. Now that we have these numbers, we can directly jump into the preparation of the activity based cost sheet and the profitability calculation. So let's now go into the main part of the solution, which is the preparation of the cost sheet and the profitability statement. Statement showing operating income using activity based costing system ABC. Particulars: brown, black, red, green, total. Alright, let's start with quantity in units. Brown 1 lakh, black 80,000, red 18,000, green 2,000, total 2 lakhs. Just one small correction, this is not red, this is yellow. Alright. Sales 1 crore 50 lakhs for brown, 1 crore 20 lakhs for black, 27 lakhs 90,000 yellow, 3 lakh 30,000 green, 3 crore 1 lakh 20,000 total. Less direct material, direct labor and incentives on direct labor at 40%. So let's note down those numbers. 50 lakhs for brown, 40 lakhs for black, 9 lakh 36,000 for yellow, 1 lakh 10,000 for green, totally 1 crore 46,000. Direct labor. All these numbers I am taking down just from the question. 20 lakhs, 16 lakhs, 3 lakh 60,000, 40,000 and 40 lakhs. We have to now provide for the incentives on direct labor at 40%. So 8 lakhs, 6 lakhs 40, 1 lakh 44, 16,000 and 16 lakhs. In our working note number 1 also we have very clearly written the bifurcation. Now if we take the difference, sales minus your direct cost, we get the contribution. So 1 crore 50 minus 50 lakhs minus 20 lakhs minus 8 lakhs, 72 lakhs, 57 lakhs 60,000, 13 lakhs 50,000, 1 lakh 64,000 and totally 1 crore 44 lakhs 74,000. Less overheads using activity based costing. Alright, so we have production runs at rupees, we'll take down the numbers once. Then we have setup at rupees, we have machine operation at rupees, if I remember correctly, 140 per hour, and we have number of parts at rupees 2,40,000 if I remember correctly. Let's check. So 2,40,000 is correct, 140 per hour is correct. This is 14,666.67 per run, and 2129.28 per setup. Alright. So this will be 100 into 14,666.67. That is 14,66,667. Then again for 100 into 14,667, 14,66,667. Then 76 runs into that magical number of 14,666.67. We get 11,14,667 and 24 runs into the magical number of 14,666.67. It will be 3,52,000. 14,66,667, 14,66,667 plus 11,14,667 plus 3,52,000. We are getting 44,01,000. Let's just round it off to 14,666,000. So we get 44 lakhs on a total basis. Let me just cross verify. So the total production run cost was 44 lakhs, which we have correctly apportioned. Next, setup cost. So 400 setups, 100 setups, 456 setups and 96 setups into 2129.28 respectively. If we do, we will get the number. So 400 into 2129.28, 8,51,712, 2,12,928, 9,70,950 and 2,04,410. Totally we will get 22,40,000. Next, machine operation at 140 per hour. So let's be careful with the working. 140 per hour into 0.1 hour per unit into 1 lakh hours. So that will be 140 into 0.1 into 1 lakh, 14 lakhs. Next, 140 into 0.1 per unit into 80,000 units. 11 lakhs 20,000. Next, 140 into 0.1 into 18,000, 2,52,000. and lastly 140 into 0.1 into 2000. 28,000. And if we add up 28,000 plus 252 plus 11 lakh 20 plus 14 lakhs, we get a total of 28 lakhs. And lastly, your setup cost, it is 2,40,000 each. Which is based on the number of parts, not the setup cost, sorry. So 2,40,000 into 4, 9,60,000. So if we now add up the total overheads, we get 1466,667 plus 851,712 plus 14 lakhs plus 2,40,000, 39,58,379 for first product, 1466,667 plus 212,928 plus 1420 plus 2,40,000. In some calculation, 1466,667 plus 212,928 plus 11,20,000 plus 2,40,000, 30,39,595 for second, 11,14,666 plus 970,950 plus 252 plus 2,40,000, 25,77,616, and for the last one it will be 352 plus 204,410 plus 28,000 plus 2,40,000, 8,24,410, and for the total column it will be 1 crore 4 lakhs. Now let's calculate the operating income, basically the contribution minus the overheads. So that will be 32,41,621, 27,2406, loss of 12,27,619 and loss of 660,410. At a overall basis it will be 40,74,000. Return on sales as a percentage, if we calculate, we will get 21.61%, 22.67%, negative 44%, negative 200.12%, and overall 13.53%. So this is how we are supposed to calculate. Now they are asking us for reason for difference. See, first let me look at the overall level. Here what are we getting? We are getting a total operating income of 40,74,000 and 13.53%. Let us check what they had given originally. Originally also what they had given was 40,74,000 and 13.53%. So is there any change? Sir, there is absolutely no change. Yes, my dear friends, on a total overall level there will never be a change. What will change is the way in which the cost distribution, especially the overheads, has happened between the products, and the product wise profitability would have changed because we are using a different basis for allocating the overheads. That is, we are now using activity based costing system for the distribution of overheads. So that is how we need to approach such kind of questions. Friends, let's look at a question from cost sheet. CT Limited is engaged in producing medical equipment. It has furnished the following details related to its product produced during a month. So they have given us a table wherein they have indicated the units and the amount. Alright. Raw materials. Opening stock 1000 units, 90 lakhs. Purchases, closing stock. Then they have given us work in progress, both opening and closing. Then they have given us direct employees wages and allowance, etc. Primary packaging cost per unit. So once the goods are produced and they are ready, they are finished after everything, then we do the primary packaging and it is going to go into your cost of production. R&D expense and quality control expenses, again going to go into your cost of production. Consumable stores, depreciation on plant related overheads. Administrative overheads related to production, going to go into our cost of production. Selling expenses, sales and distribution. Royalty paid for production, direct expenses. Cost of website for online sale maintenance. So this will be your selling and distribution expenses. And lastly, secondary packaging cost per unit rupees 225. Again, this is your selling and distribution cost. There was a normal scrap of 250 units of direct material which realized rupees 5400 per unit. So this scrap value we have to deduct it from the cost of the material consumed. The entire finished production was sold at a profit margin of 20% on sales. You are required to prepare a cost sheet showing what is the prime cost, what is the gross works cost, what is the factory cost, the cost of production, the profit and the sales. So pretty simple, straightforward cost sheet. Let us directly jump into the solution. Alright, so let's prepare a statement showing cost sheet. Particulars, units, amount. Alright, raw material. Opening stock. They have given 1000 units, 90 lakhs. Add purchases 49,000 at 44 crore, 10 lakhs. Less closing stock 1750, 1 crore 57 lakh 50,000. So 1000 plus 49,000 minus 1750, we get 48,250, 43 crore 42 lakhs 50,000. From this, let us deduct the scrap value of normal wastage of raw material. See, if it was relating to goods produced, then we would have deducted this realization from cost of production, but they are saying material, so we are taking in raw material. So 250 units at rupees 5400, 250 into 5400 gives us 13 lakhs 50,000. So we have material consumed 48,000 units, 43 crore 29 lakhs. Next, direct labor. So you have all your employee wages, allowance, etc., which is given as 6 crores 688 lakhs 50,000. Then we also have one direct expense, which is your royalty paid for production, 3 crore 64 lakhs 50,000. So direct material plus direct labor plus direct expenses put together, we will get our prime cost for 48,000 units as rupees 53 crore 82 lakhs. Next, to this prime cost, let us add factory overheads. So you have your consumable store, depreciation, etc. relating to production given as rupees 3 crore 42 lakhs. We get our gross works cost 48,000 units, 57 lakhs, or rather 57 crore 24 lakhs. To this gross works cost, let's adjust for opening and closing WIP. Add opening WIP 2000 units given at 1 crore 75 lakhs 50,000 less closing WIP 1000 units 94 lakhs 50,000. So all these numbers for opening and closing WIP have been given to us in the question. So we get factory cost or works cost net for 49,000 units as 58 crore 5 lakhs. Now to this, let's add other production related costs such as R&D, quality control, and administration overheads relating to production, etc. to arrive at the cost of production. Add admin overheads related to production 3 crore 15 lakhs. R&D expenses and QC cost 2 crore 10 lakhs 60,000. Primary packaging at rupees 1440 per unit. So 49,000 into 1440, 7 crore 5 lakhs 60,000. If we add, we get cost of production for 49,000 units as 70 crore 36 lakhs 20,000. Let's add selling and distribution overheads. So we have selling expenses 4 crore 84 lakhs 30,800. Cost of maintaining website 60 lakhs 75,000. Secondary packaging at rupees 225 per unit. So 49,000 into 225, 1 crore 10 lakhs 25,000. We get the cost of sales for 49,000 units as rupees 76 crore as rupees 76 crore 91 lakhs 50,800. To this cost of sales, let's add profit at 20% on sales. So, if sales is 100%, profit is 20%, cost is 80%. So, on that basis, calculate the profit and sales. So, profit will be 19 crore 22 lakhs 87,700 and sales will be 96 crore 14 lakhs 38,500. So, this was a question based on preparation of cost sheet and it is a very simple straightforward question. The only thing that we need to be careful about is how we group the items, especially the production related items such as your R&D and quality expense, primary packaging and production related admin overheads. So, if we are careful with that, rest of the solution has no real complications. Friends, let's look at a question from cost accounting system. The financial books of a company reveal the following data for the financial year ending on 31st March 22. So, they have given us an opening stock of finished goods 875 units, 148,750, WIP opening 64,000. Then during the year, that is 1/4/21 to 31/3/22, they have given details of raw material consumed, direct labor, factory overheads, goodwill written off. Now, what is this goodwill written off? It is more like a financial expense. Only in financial books it will get reflected. If we were to prepare cost records and if we were to prepare a costing P&L, this would be an item of reconciliation. It will appear only in financial records, not in cost records. Admin overheads, dividend paid, same, just like your goodwill written off, financial item. Bad debts, financial item. Selling and distribution overheads, interest received, financial item. Rent received, financial item. Sales 14,500 units. Closing stock of finished goods 375 units and work in progress. So, they have given us certain information. The cost records provide as under. Factory overheads are absorbed at 60% of direct wages. Let's hold on for a moment. So, the factory overheads incurred as per the financial records are 6 lakhs, but they are saying we are going to absorb only 60% of direct wages. Direct wages is 9 lakhs, 60% of 9 lakhs is 5 lakh 40,000. So, we are going to absorb factory overheads 5 lakh 40,000, but we have incurred 6 lakhs. So, this again will become a reconciliating item. Administrative overheads are recorded at 20% of factory cost. There may also be again a reconciling difference in the amount expended 5 lakh 90 and the amount absorbed. Selling and distribution overheads are charged at rupees 8 per unit sold. Now, how many units we have sold? We have sold 14,500 units. Into 8 if I do, we get 1,16,000, whereas what we have incurred is 1,22,000. So, these overheads incurred versus overheads absorbed are going to become a part of our reconciling items. Opening stock of finished goods is valued at rupees 208 per unit. Let's hold on. 208 into how many units they have given? 875 units. So, into 875 if we do, we get 1,82,000. But whereas as per the financial records, it is given at 1,48,750. So, the opening stock under financial records is undervalued. That again will become a reconciling item of difference. And naturally, if opening stock valuation differences are there, we may also have closing stock valuation differences. Those will be the reconciliating items which we'll have to deal with. The company values work in progress at factory cost for both financial and cost reporting purposes. So, there will be no difference as far as opening and closing WIP valuation is concerned. We are going to have differences only in regard to the finished goods. Let's look at what is required. Required 1. Prepare statements for the year ended 31st March 22 showing profits as per the financial records, profits as per the costing records. Simple. Second, present a statement reconciling the profits as per costing records with the profits as per the financial record. So we need to prepare a reconciliation statement. So this question, simple, straightforward. Let's start off first with preparing certain, basic working notes. Let's identify what are the number of units sold and produced. Let's prepare a cost sheet in order to arrive at the valuation of closing stock of finished goods. And, based on that, let's prepare the financial profitability, costing profitability, and then the reconciliation statement. So let's directly jump into the working notes. Working note number 1. Number of units produced. So they have given sales as 14,500. Add closing stock minus opening stock. How much is the closing stock? They have given closing stock as 375 units and they have given opening stock as 875 units. So this will be the number of units produced or the production. 14,000 units is what we have produced. Let's go to the second working note where we prepare the cost sheet for 14,000 units produced. Particulars, amount. Raw materials consumed. $15 lakhs 60,000. Direct labor 9 lakhs. Any direct expenses? Nothing has been indicated. So this will be our prime cost 24 lakhs 60,000. Add factory overheads at 60% of direct labor. So basically 9 lakhs into 60%, 5 lakh 40,000. This will be our factory cost 30 lakhs. Let's adjust it for opening and closing WIP. Add opening WIP less closing WIP. Opening WIP 64,000, closing WIP 77,334. They have very clearly given that both for financial records as well as costing records purposes, the WIP valuation is at cost. So we do not have to do any kind of adjustments here. So 30 lakhs plus 64,000 minus 77,334, we get 29 lakhs 86,666 as factory cost. So this was factory cost or works cost gross. This is net, or you can say factory cost of goods produced. Add admin overheads at 20% of factory cost. So 29,86,666 into 0.2, 5,97,333. This will be our cost of production 35,83,999 for 14,000 units. Therefore, cost of production of 14 cost of production per unit will be 35 lakhs 83,999 divided by 14,000, which is 255.9999 or say 256 per unit. So this is the working for your cost of production and your cost sheet. Now let us jump into the preparation of the statements where we show the financial profit, costing profit and the reconciliation. First one, statement showing profit as per financial records. Let's prepare a simple T-shape P&L. To opening stock of finished goods 1,48,750. WIP 64,000. Next, to raw material consumed, how much? 15 lakhs 60,000. Next, to direct labor 9 lakhs. Next, to factory overhead 6 lakhs. Next, to admin overhead, how much is it given? 5,90,000. Next, to selling and distribution overheads 1,22,000. So these are the normal items of cost. Then on the credit side, by sales 41 lakhs 60,000. By closing stock of finished goods of WIP, finished goods 82,500, WIP 77,334. So these are the normal items, and then we have the items which are purely going to get included in your financial profitability calculation. So we have to goodwill written off 2 lakhs, to bad debt 24,000, to dividend paid 1,70,000. On the income side, by interest received 90,000, by rent received 36,000. I think we have covered all the items. Let's total up and find the profit. So this will be 44 lakhs 45,834. 44 lakhs 45,834. And kindly calculate the profit. we get the profit as 67,084. So this is how we calculate the profit as per the financial records. We have included all the items, whether relating to production or not, whether relating to costing or not, including items such as rent received, interest received, bad debts, goodwill written off, dividend paid. Technically dividend paid we get after the profits. So we have profits and then appropriation of profit is dividend, but for the purpose of this statement we have considered dividend also as an expense. Alright, then let's go to the second statement. Statement showing profit as per cost records. Particulars and 2 columns for amounts. Let's start with the sales revenue. 14,500 units. 41 lakhs 60,000. Let's indicate the cost of sales. Opening stock of finished goods. How many units do we have in opening stock? 875 units, and they are asking us to take it at rupees 208. So 875 into 208, 1,82,000. Add cost of production of 14,000 units at 256. This is coming from working note number 1 and 2. So 14,000 into 256, 35 lakhs 84,000. Less closing stock of finished goods. How many units we are having in closing stock? 375 units, and again this is to be valued at the current period cost of production at 256, assuming FIFO. So 256 into 375, 96,000. So current year production plus opening minus closing is going to give us cost of production of goods sold. So 182 plus 3584 minus 96,000, 36 lakhs 70,000. To this, let us add selling and distribution overheads at rupees 8 per unit. Why am I not taking the figure given in the table? Because those are financial records. For costing, they are asking us to take it 8 rupees per unit. So let's take it 8 rupees per unit for units sold. How many we have sold? 14,500. So this will be 14,500 into 8. 1,16,000. So this will become our cost of sales. 36 lakhs 70,000 plus 1,16,000, 37 lakhs 86,000. And finally, if we compare this with the sales, we will have the profit. So sales is how much? 41 lakh 60. So 41 lakh 60,000 minus 3786, we get a profit of 3 lakh 74,000. Now the profit as per the costing P&L is 3 lakh 74,000. As per the financial records, it is how much? 67,084. We now need to prepare a reconciliation statement between the two items. And what did we discuss are going to be the reconciling reasons? One, items purely of a financial nature, such as your dividend, your interest received, your rent received, your goodwills written off, your bad debts. So these 5 items are purely financial nature. Then we have 3 related to overheads. So there is some under absorption, over absorption of your factory overheads, admin overheads and selling and distribution overheads. And then last 2 adjustments will be in relation to the valuation of opening stock of finished goods and closing stock of finished goods. So these items if we take, we will have the reconciliation statement ready. So let's prepare the reconciliation statement. Third, statement showing reconciliation. Particulars and amount. So you can either start from the financial level and go to the costing level, or we can start from the costing and then go to the financial profit. Let's start with the costing profit. So profit as per cost accounts, 3,74,000. Add. So what are the items of income that have been considered only under financial records and not under cost records? Let's add those items. So we have interest received, rent received. So let's do that. Interest received 90,000. Rent received 36,000. Then let's talk about the valuation of inventories. Let's try to identify whether we have to add it to the costing P&L or deduct it from the costing P&L. Now when are we going to add the add it to the costing P&L as a part of the reconciliation? See, let's consider opening stock. If opening stock as per financial records is more and cost records is less, that means we are debiting more cost in financial records than the cost records. So that difference we need to add it. On the flip side, if cost records is more and financial records is less, opening stock, that means we are debiting more in the cost records. So we need to kind of adjust it. So let's take case of opening stock of finished goods. Now, how much is the opening stock of finished goods as per financial records? As per financial records, it is 1,48,750. As per cost records, it is 1,82,000. Therefore, the debit, is it more in financial records or cost records? The debit is more in cost records. So, I have to reduce the debit, or in a way, I have to add it back. So, let's add back the difference. So, we can say overvalued in cost records being added back. $33,250. Let us leave some 2-3 line space and let's go to the deductions. Then we will see if any other items are to be added back. Less. Let's talk about the closing stock of finished goods. As per financial records, it is 82,500. As per cost records, it is 96,000. So the profit is more, or rather the credit is more in cost records. So because of that, the profitability is more in cost records. We need to reduce. So again we will say overvalued in cost records. 96,000 minus 82,500. 13,500. This is item of less adjustment. Then what are the items which are debited only to the financial P&L and not to the costing P&L? Those goodwill written off, bad debts written off, etc. That let's deduct. Goodwill written off 2 lakhs. Bad debts 24,000. Dividend 1,70,000. And now we are left with the adjustment of overheads. So there are 3 types of overheads: factory, admin, selling and distribution. Factory, admin, selling and distribution. Let's try to find out what is overabsorbed and underabsorbed. Overabsorbed we will deduct, underabsorbed we will add back. Overabsorbed we will add back, underabsorbed we will deduct. So let's start with the first one, which is your factory overheads. Now how much is the factory overheads that we have incurred as per the financial records? 6 lakhs. But how much have we recovered? We have recovered only 5,40,000. So the differential 60,000 we have to now deduct. So let's say under recovery of overheads, factory overheads, 6 lakhs minus 5,40,000, that is 60,000. Then let's go to the admin overheads. What happened with admin overheads? We have incurred 5,90,000, but the absorption is 5,97,333. So we have over absorbed. Let us kind of add back. Over absorbed overheads, admin overhead, 597,333 minus 5,90,000, 7,333. And then the last item is selling and distribution overheads. We have incurred 122, but we have absorbed only 116. So again there is under recovery. So let's go to the deductions. Selling and distribution overheads, 122 minus 116, that will be 6,000. So these are all the items. Hopefully if we adjust, we should come to the profit as per the financial records. Let's check. So these are the add items: 90,000 plus 36,000 plus 33,250 plus 7,333, 1,66,583. Let's take a subtotal: plus 3,74,000, 5,40,583. Deductions: 13,500 plus 2 lakhs plus 24,000 plus 1,70,000 plus 60,000 plus 6,000, 4,73,500. Let's deduct this from 5,40,583. We get 67,083, which is exactly equal to the profit as per financial records. So these are the type of questions where we cannot go wrong. The moment we know that the number has reconciled, that means our solution is perfectly correct.